Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, May 22nd, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since May 6th. Check the trend gauge. We've got the coveted 4 green arrows, meaning market leadership is plentiful and acting well. And all 5 of the major indexes, we track them across 3 time frames to get the overall health of the market, and all 5 trending above the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. So what happened today? All week, really, the market has been in consolidation mode, pointing to a big after-hours earnings report by NVDA, which would have a big impact on probably 50 to 60 stocks that are involved in the data center AI hardware build out. And NVIDIA did not disappoint, crushing earnings up between 3 and 4% currently after hours. And some of the stocks closely related to it up as well. The action, mild pullback during the day. The numbers are red, but um, still normal action, normal consolidation. Now we'll see if this earnings report will be the catalyst to propel the market out of this 5-day trading range that we're in, and we'll look to tomorrow's action to judge that. Here are the numbers on the day. Leaders continue to pull back, worse than the indexes. 16 down, only 5 up on the 21 over 21 list, down an average of 0.64%. This is closer to minus 1.6% if you exclude First Solar, which was up over 18% on the day. The big 8 taking a big break, down 0.76%, led to the downside by Tesla, down 3.5%. Weak European sales, and also Panasonic, one of their big battery suppliers, pulling back on a reduced forecast for sales. And 1 + 1 = 2. They supply Tesla. The thought is that Tesla doesn't need as many batteries, and that's pretty much what Panasonic said. We've seen EV companies that need our batteries pull back. RG8, this is our 8 growth ETF composite, pulling back a little more than 0.5%, led to the downside by FFTY. That's the IBD 50 ETF, down 1.2%. S&P 500 opened down just a bit, chopped around. Intraday sharp move to the downside in the afternoon, but recovered most of it, still down about 0.33%. Equal weight S&P down 0.4. NASDAQ 100 and equal weighted NASDAQ 100 basically flat. The Qs slightly down, equal weight slightly up. Dow down 0.5%. Mid caps down 0.8%. Russell 2000 small caps down 0.8%. Global diversified 60/40 stock and bond down 0.4%. Our flagship portfolio, GROTECTION, down 0.35%. One thing before I forget to mention it, on NVIDIA, they announced a 10-for-1 stock split, and that sets them up for entry into the Dow Jones Industrial Average if the Dow committee will open their eyes and put some of the stocks that belong in there and take out the ones that don't. Let's go to the indexes. S&P 500, you can see a pullback, still completely contained by the uptrending 8-day exponential moving average. This is a thing of beauty. Let's go to a 15-minute chart here, and you can see after the gap up on CPI, the tight range, 1, 2, 3, 4, 5-day consolidation. After hours, still within this range, not really popping much on the indexes. We'll see how that shakes out tomorrow. Let's go to the NASDAQ 100, just barely down on the day, popping to intraday highs during the session, and you can see the relative strength. It struggled for a while, struggled for months, in fact. It popped in early January, but now reigniting off the bottom. Good stuff there for tech names. Dow Jones Industrial Average still can't reclaim that 40K level, undercut, but closed right on the 8-day exponential moving average. S&P mid cap 400 undercutting the 8-day, still above the 21-day, so showing some certain relative weakness over the last week. You can very clearly see that. And the Russell 2000, also relative weakness over the past week, breaking below the 8-day exponential moving average. Let's go to the VIX. VIX had been down. Wider range, closed mid-range, up 3.6%. The dollar up on the day, into the declining 21-day moving average. We don't want to see that pop back above the 21. Strong dollar is a headwind for stocks, although stocks bucking that trend over the last 5 days as the dollar is making higher highs, but so is the market. On to precious metals. These got hit hard today out of the blue. Commodities are not easy to trade. Overnight moves are common. And here you see GLD down 1.84%, still above the 21-day moving average. GDX, gold stocks, down 4%. We trimmed our position on this today. Silver, down 3.6%, still above the breakout level. Bitcoin, we own the IBIT ETF, tight range consolidation, slightly positive on the day. On to bonds. Yields started higher, pulled back as the day went along. Tight range on the BND, that's the broad bond index, down slightly. The TLT, on the other hand, up slightly, meaning you're going to see the TYX, and well, it should be basically flat, but yeah, slightly down 0.07%. And the 10-year TNX up on the day 0.05%. All right, that's our inter-asset correlation chart section. Let's get to the tail of the tape. You can pause this. I'll hit the highlights. NVIDIA now, we added a little bit to this after hours, and now we're positive on that. We added around 992, and it's approaching 1,000 after hours after closing at 950. And the conference call just started, so apparently it's going well. They crushed their data center revenue, and that is the big driver for the AI data center hardware companies as well. Oh, where are we here? Let's hit the not much up on an index perspective or sector perspective during the day, but solar's just blasted to the upside. Semiconductors also having a good day. Bonds mix, but to the downside, commodities, oils, gold, and silver stocks, copper and uranium, banks and builders also down. A couple of changes to the portfolio. We trimmed GDX and ERX, locked in about a 7% gain on GDX, about a 6% loss on ERX, and we were stopped on FCX with the big negative reversal. Did some offensive selling on First Solar as it got 4 ATR extended from the 21-day moving average. This is just a typical thing that we do. I mentioned it yesterday, and it continued to climb another, let's see, 20 bucks or so after I sold it. So ridiculously extended now is First Solar, but it's also showing extreme strength, gets our attention for any pullbacks to build out a bigger position. Overall effect of that is to reduce our adjusted beta from 1.54 to 1.45. Bottom line on the day, mild pullback, 5th day of a consolidation. NVIDIA up after hours on earnings, and I now see it has printed $1,000 after earnings. Okay, let's get to a couple of charts. And as always, we'll focus on what we own. Let's go to the 21 over 21 list. First of all, the 5 that were up on the day. Here's First Solar. I said we took some took some offensive selling on this when it was up a paltry 8%. It continued to rock and roll on massive volume. And look at the TAN ETF. Up big on the day, up 9% coming into the declining 200-day moving average. So this has been a beaten down sector for a while. We like them when they come off the lows. Look for the leader in the group. This has improved from being an E-rated sector to C-rated now. First Solar, the leader coming off the bottom, will be diving into this sector a little bit more. PDD, we trimmed this yesterday, had a big gap up, but pulled back into this little high handle that it's putting in, and the cup and handle still within the pivot plus 5% build area, but positive relative strength, a spot where we will be looking to add to this as well. VRT data center cooling. You can see it's up another 2% after hours. Held the 100-day or that 100 Livermore level on the close today, and now adding to it after hours. Pure Storage continues to act well. Hava acting well. Something does not. No, that's right here. Apparently, there were 6 up, not 5 up. Oh, I know what it was. I discounted IBIT because it wasn't in the original 21 over 21. Let's see what was down on the day. A few that we own. FCX being the one that we got stopped out of. Reclaim of the 21, possible re-entry on that. App down 5%, sitting right above the 21. There's GDX, which we trimmed half of. There's ERX, which we trimmed half of. This is right at the bottom of a consolidation. So it should have some support here, which is why we didn't blow the whole thing out. CCJ, I mentioned Commodities week today. This pulled back 3%. Nutanix down 2%. And we'll wrap it up with Spotify pulling back, but bouncing at the 21-day moving average. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio, as a reminder, because it's not how much you make in the markets, it's how much of that you can keep, serves a dual mandate of growing assets in uptrends and protecting them during downtrends. It's a common sense approach. What other aspect of your life, when it's not going well, do you take action to fix things, or things are going well, you keep doing what you're doing? For some reason, Wall Street has attempted, well, I know the reason, it's greed and conflict of interest. They want you to stay in their product so that they can continue to suck fees out of your wallet. Recognize the trend of the market, and you decide whether or not you want to give them those fees or not. We're not doomsdayers here. We're just optimists with a downside. It's like Reagan said, trust but verify. And with that, I'm going to wrap it for Wednesday, May 22nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.